right, so I guess we can begin. So yeah, good morning, everyone. Thank you guys so much for coming to today's session. Today, as you guys know, is May 11th. It's a Wednesday, 2022. It's the middle of the week, and we're starting to see some possibly solid setups forming in the market. And the reason why I say possibly is because right now the market is sort of in the middle of a rotation. And we're going to talk about that in a little bit. And sometimes when the market is in the middle of a rotation, sometimes it could be unclear what the market may want to do. It can still continue in its trending fashion, or it could complete that rotation and continue pushing higher. But what we're going to do, we're going to look at a few setups. And for these day trading setups that we're going to look at on today, there's some level of ambiguity, like some of the things that we typically look for all the time, we don't see it with these particular setups, mainly due to the fact that it's in the middle of a rotation, and certain times, it takes a while for price to really confirm it, based on directionality. And you guys will know what I mean when we get there, when I start talking about it. But I guess for now, we can move forward and start talking about a few day trading opportunities. Well, really, there's a lot of quite a number of day trading opportunities. I won't be able to reveal them all, but I'll probably share some of them in the signaling room or channel or markup room so that you guys can take a look at them. But with that said, let's move forward and let's talk about what we're seeing right now in our chart right now. Now, let me ask you guys this question. What do you guys see? Yeah, I know. Well, let me just talk about this and then we'll go to another topic. I know Marvin reminded me about inflation, but of course, let's just talk about this first, and then we'll touch on that. But all right, so then what is it that you see? Okay, Danny said a double bottom. Exactly. We do see a double bottom or a W pattern. We see this left bottom, push up, right bottom, push up. So then because we see that double bottom, we pretty much see a bullish, rotation, right? And price could be, just like Ryan said, starting this pullback lower. We could see this correction lower, mainly due to the fact that price is hitting, resistance up here. Look left, you can see this congestion area, to the left, right around here. This whole zone or area is an area of resistance right around here. Plus, we have price testing this 100-hour moving average. This orange line right here represents the 100-hour moving average. And, if we were to do something like this, which I haven't done in a while, a fib inversion, or Fibonacci of this double bottom, you could say, price is testing the 141.4 Fibonacci extension level, which means that it could be overbought right now, and we're due for a correction. And if you look lower, we can see that on the stochastics we're overbought as well. So then right now we're due for a correction lower. So then we definitely want to do what? Do we want to buy or sell? Let me ask you guys that question. Do we want to look for a buy opportunity, or do we want to look for a sell opportunity? Okay, Ryan said buy, Robert said buy, and yeah, the both of you are correct. We want to look for a buy opportunity, even though if you know what you're doing, you could look for opportunities to sell these highs, because we're going to get a pullback. But sometimes the best thing to do is to go with the side of momentum, and it could be quite confusing because of what we're going to see next. So we know that we want to buy the dip. We want to look for a pullback and then look for an opportunity to buy. That's what we want to do. But we need to see if there is directional confluence. We need to see if multiple time frames confirm a bias in a particular direction. That's what we typically do in order to be more confident in our positions. So what we're going to do, we're going to move up the time frame. We know that the 1 hour is looking bullish. We want to look for a buy. let's go to the 4-hour. Let's see what the 4-hour says. So we're going to drop or move up to the 4-hour. Now the 4-hour, let me ask you guys this question. Is it looking bullish or bearish? Based on what we see on the 4-hour. Is it looking bullish or bearish? Okay, Jesse said bullish. Ryan said neutral. Yeah, Jesse said bearish overall. Bearish overall. Bearish. Danny said bullish double bottom. Okay. So this is where it can get tricky. Okay, because what we see, we have to look at price action overall. And if you were to draw in, you know, your price waves, what we could conclude here is that price is still somewhat in a bearish environment, even though we do see this double bottom right here. Like, just because we see the double bottom doesn't mean that it's in a bullish environment yet. The 20 SMA is one key factor that we look at. You know, we see that it's sloping to the downside. It has a nice slope to the downside. Once we see it start curling or sloping up, then, you know, that could be, you know, signs of a rotation to the upside. Now, one thing I do want to point out is that if you look at the stochastics below, it looks like things could be shifting. You know, we see that price is going lower, but we see something like this taking place. So then what is that called for those who are familiar? Yep. Yeah, I know Danny said, guess I wanted to say bears looking for reversal. Yep. Yep. Divergence. Exactly. Exactly. Or convergence. You know, a lot of people, they use different names. Technically, based on what we know from technically, it's really convergence, but you can use what is called a bullish divergence here. So then, you know, that's what we see right here. We see this divergence, or what you call bullish divergence. Other people would call this convergence, whatever you want to call it, as long as you get an idea of what's happening. That price could be shifting, momentum could be shifting to the upside. So then we got to pay attention to that. So then we do see that on the 4-hour time frame. And let me remove this. Now let's drop down to the daily. Okay, daily, we still see a, you know, bearish environment, 20 SMA sloping downwards. However, you know, there's a few things we need to really look at. For starters, prices oversold, and, you know, we're hitting a key level, or we're testing a key level of support. Right here, the 69-cent level is an institutional level. So, you know, we're expecting price to respond and maybe correct higher from there. So, you know, this is what we want to do. We want to look for an opportunity to buy the dip. But what we could do in order to play it safe is reduce our position size, like take on less risk. You know, you don't have to risk a full 1%. You know, you can risk half of a percent, whatever you feel comfortable with risking on a trade like this. But based on what we're seeing right now, even on the 4-hour divergence or convergence, whatever you want to call it, we want to look for an opportunity to buy the dip. So in this case, we're going to look to buy. We're going to wait for the pullback. We're going to look to buy at support. So then right now we need to figure out, where do we want to buy at? That's the next step in this process. Where do we want to buy at? So, you know, there's a number of things we can do. Let me ask you guys this question. What would you do in this case? You know, just to get you guys more involved. Just like, I just want to see, how would you approach this? Like, where would you look to buy at? So yeah, I'll give you guys a few seconds to chime in. Okay. Ryan said 7. Are you referring to this institutional level right here at 0.70? Okay. Yeah. Well, yeah, it's possible. But like I know for me, I would probably look for a deeper correction. Um, where okay, Jesse said where previous candles have closed. Um, are you so you're referring to the 70 level too, I believe, right? I'm not sure. Then he said wait for pullback to 69.70. Um, that's right around here, you could say. Well, 69.70 is right here where the neckline is, which is yeah, a good spot to wait for price to go down to. Jamal 69.96.7. Yeah, I know you guys were thinking about right, right around here, but um let me just do this. Um whenever you see price, create like let's just say a double bottom, then there's a particular zone or area that's going to serve as structure. So what you could do also if you're struggling with trying to figure out what to do, you can always draw in your price waves. So looking here, what we could do in this case, let me just do this right here, and let me just draw in these price waves. So then we have okay, so let's start from here. We have this one right here. um, okay, so we have this created a lower high and a lower low right here, and let's do an equal high, and then let's do right here a lower low, lower high, and let me just we can skip here and just go lower low, lower high, and then we have a equal low right here, and price expanded to the upside. So then what we could look at is the area where you have these two pivots, um, right here and right here. And one thing you have to understand is that price likes to attract to these what I like to call true swing levels like a magnet. And they can act as support and resistance, because we see here on this move to the upside, where did price go? To the previous swing high right here. This prior swing high right here served as resistance. Now price looks like it wants to fall. So if you pay attention to these real true swings in the market, you can find the good areas where you need to consider looking for buys or sells around. So in our case right now, what we're going to do, we're going to simply look for price to retrace to this particular area right here, where we have these two swings right here, these two turns or anchor points, whatever you want to call it, right here in this area. So um, let me do this right here. Okay, so right now we're just going to simply wait for price to come to us. That's all we're going to do. Let me do this a little bit higher right here. We're just going to simply wait for price to come to us. But what I'm going to do, I'm just going to remove this right here, and I'm going to do a few things. I'm going to first take out our Fibonacci, draw it from the high to the low right here. Well, not the real low, but where this swing low is. And we can see here that the 38.2 is right where we have our structure level, right here. So then what I'm going to do, I'm going to place an alert right here at this structure level. And I'm going to include the date, which is May 11th. And I'm going to say price is testing one structure plus 382, you could say, because it's in the same area. Drop down to trigger, wave pullback, look to buy on bull confirm. All right. So yeah, we want to look to buy on bullish confirmation. But yeah, we're just going to simply wait for price to come into this zone right here, into this zone right here in this area. And then from there, we'll look to buy And for this one, what we can do, we can use the double bottom as our potential target. We can take it from the lower bottom, go all the way up to where the neckline is, you could say, and drag that right here. And that can almost take you to where this structure level is, right around here. So yeah, this is what we're looking for right now on AUD USD. So what I could do right now is I don't know if you guys want to take a screenshot of this. You can if you want to, but we're going to probably we're probably going to post it to the group anyway. So if you guys don't, then don't worry about it. Let me for one remove this just in case you guys do want to take a screenshot these lines. But yeah, what we want to do is wait for a pullback, wait for that correction in price, and then we're going to look to buy. So yeah, are there any questions about this particular setup? Going once, going twice. All right, so then yeah, that's what we're going to do. We're going to wait for price to come to us. Remember, we're not going to chase the trade. We're going to wait for the trade to come to us. So all right. Stops, yeah, well, the stops will be based on what we observe in the trigger time frame. But you can have an idea right now based on what you want your reward to risk ratio to be. So then let's just say that we measure this move from this low right here all the way up to this area right here. So then we know it's about 58 pips, right? About 58 pips this move. So then you could say, well, if it's around 58 pips, I could have somewhere between a 25 to 30 pip stop. That'll give me, around a ballpark of where my stop loss should be. It should be, 25 to 30 some pips, behind where I enter. But a lot of this you won't know until you get to the trigger time frame. The trigger time frame will let you know where your stop losses should be. It should definitely be behind a structure area, but this is how we get a decent reward to risk ratio. So but yeah, if you want to get an idea of what you want your stop to be, then 25 to 30 pips is a good good level or good cushion for a stop loss. Yeah, and I just also want to include, like, I know we normally determine our stop loss by going down to the lower time frame, the trigger time frame, once it gets into the zone that we just identified, because you can get a more tighter and more accurate entry and also accurate placement on your stop if you if you wait to go down to a smaller time frame. It could be the 15-minute, 10-minute. So then we usually wait, but of course, like Melvin said, like, it'll be good to calculate reward to risk ahead of time and say, okay, on average, even though we don't know how it's going to form, but we could just say on average it's going to move about 58 pips, so I need about a 20 pip, 25 pip stop loss. Yeah, 25, 30 pip stop loss. Yep. So yeah, but yeah, yep. So all right, yeah, I think yeah, did you I still have quite a few to go over, like, yeah, I know Marvin wants to talk about the important announcement that's going to take place. So then what we're going to do, we're going to take a small break, and then he's going to talk about that because it's going to happen in about 10 minutes. And then of course, we're going to go right back to these charts and look at more of these day trading type setups and opportunities. A lot of them are in the process of forming right about now, but it shouldn't take too long. So what I'm going to do is pass the mic over to Marvin, and he's going to talk about it briefly, and then we're going to go right back to these charts and look at more day trading opportunities, and then do some top-down analysis after that. All right. Okay. So I'm going to try my best to sort of go through all of this and to sort of simplify what's going to take place in over 10 minutes. Now, I'm going to make it quick because I know Melvin has a few day trading setups that could be forming now. But just as a word of advice, whenever you have a dollar denominator, a dollar-based currency pair, you may just want to exercise caution around important announcements. And the reason why I say that is because there can be a lot of volatility with the dollar. since we have U.S. inflation numbers, the consumer side inflation numbers coming out, that would definitely impact U.S. denominated assets, U.S. based currency pairs, or stocks. Of course, we know that the stock market isn't open, but U.S. based assets will be affected by this monetary policy announcement. So um, you guys know that inflation has been, high, for some time, for some months, really over a year. We've been seeing prices constantly, increase little by little each month. And we know that right now, according to last March's, annual CPI data, it's at 8.5%. That's what the reading came out last month for March's CPI. So then let me just do this. Let's just go to investing.com and just pull up the economic calendar. Okay, because it'll be good just to look at it. These numbers, I know they'll be coming out in about 7 minutes, and we're going to take a look at the dollar to see what happens with the dollar. But as you guys know, overnight we had some inflation data coming out of the Eurozone with Germany. This week the focus is on inflation and measuring pricing pressures to see where pricing pressures are at the moment. So then let's scroll down to this US docket right here, and we can see here that there's a slew of data, coming out actually for today. But within the next 5 minutes, we have a slew of CPI data. That's, inflation on the consumer side. And pretty much what the CPI is, it stands for Consumer Price Index, which is just an index or a basket of goods and services that, of course, they set to sort of assess how much prices have changed over time. How much is it increasing? How much is it decreasing? So it's an inflationary gauge. It's an inflation barometer to let us know where inflation is. So this is on the consumer side, because that's where it's going to impact growth the most. Where, if it hurts consumers, if it hurts consumption, then that's going to impact growth, because GDP, we calculate GDP, and a major part of the GDP equation is consumption, is measuring consumption. If prices are increasing for consumers and it's becoming hard for them to buy goods, then that's going to cause consumption to drop, buying, of goods, consumer activity drop, and that's going to impact growth. But we can see here that for this CPI reading, this is core CPI, but let's go to the headline figure. You can see here that inflation came in at 8.5% last month. This is March's reading, but for this month, it's expected to soften a little bit to 8.1%. And if we look at also the month-to-month value, it's expected to soften as well. So then, of course, right now, the talk has been that there's some signs that inflation could be peaking, or it could be rolling over. And we could see the sort of like the end of maybe that inflationary drive higher. And we could kind of see it settling and maybe scaling back. So then there's some discussions, going on in the economy. Okay, is that taking place? What's happening right now? Of course, we see this month to month coming in much lower than, where it was the previous month. We saw that in March, inflation from month to month, from February to March, came in at 1.2%. Prices increased by 1.2%. But we could see here that from March to April, that analysts are expecting or forecasting that inflation or pricing pressures only improved by 0.2% on a month-to-month basis. So then that's a drop. So then that's disinflation. So then what disinflation is, it's saying that there's not necessarily no inflation. Like, inflation is still going to pick up, but it's going to be little and little and little each and every month. And it's going to get lower and lower and lower, which is indicating that inflation could be peaking and getting ready to roll over. But what's interesting about this number, April, especially the year-to-year value, is that, like, on last year, April 2021, that's when we started seeing signs of inflation surging. So this whole inflation cycle or window we've been in began in last March, around April 2021, where prices started increasing at a substantial level. So then with this year-to-year value, it can be kind of misleading, and it's going to be off due to what's called the base effect. And what the base effect is that when you calculate last year's number, and when you include last year's number of inflation number into the equation for this reading, that number is going to be included in the denominator of the 12-month supply calculation. So then if there's going to be a bigger number in the denominator of this equation that calculates year-to-year CPI, then overall it's going to bring in a smaller number. Like inflation is going to look like it's much weaker than it actually should be. So then, that's what's called, the base effect. Just based on simple mathematics, it's going to be lower. And of course, analysts notice that the number is going to be lower, but they're like, okay, how low is it going to go? Like, we know it's going to be low just based on the base effect, from last year, but how low is it going to go? So then that's what's causing some concern and some caution among, traders, analysts. And, and this is the reason why markets were jittery the whole entire week, where we saw the volatility, we saw the choppiness and the push and pull dynamic. It was pretty much in anticipation of these CPI numbers. What is really happening? Because we're seeing 12-year break-evens fall. And I wish we had more time because I know we only have a minute, but let me just do this real quick. Let me just, I'm just going to try to get to this because you guys got to see 10-year break-evens in order to understand why. So then this is the 10-year break-even, and we can see that since April 2022, it's been sliding from 3%, and it's now down to 2.65%. So this is inflation expectations. And what the break-evens let us know, really they inform us that within 10 years, this is where inflation is expected to be at 2.65% in 10 years. So it's come down since the end of April. So then is this a sign that inflation is peaking and rolling over? Is what we're going to see with the month-to-month value, that difference in the month-to-month right here. Is that an indication that inflation is peaking and getting ready to roll over? So then that's the reason why markets are jittery, because we're seeing what's happening with break evens right here sliding lower. And then we're seeing also the month-to-month figure to come in weak as well. So then we just got the number to come out, and the headline figure year over year is showing that inflation is picking up. Of course, like this is something that's pretty good, because with this number, it's higher than 8.1 than the forecast. But when you price in the base effect, then this must mean that inflation is a lot much, worse than we think or than we know. So then, of course, it's, came in at 8.3%. We see the month-to-month figure came in more, and even with the core figures, which excludes food and energy, we can see that it improved as well. So what should we see happening to the dollar? Well, for one, this just means that Fed is probably going to pick up their hiking, and they may readopt that 75 basis point rate hike. They may say, okay, inflation is running out of control. And even with the base effect, where they were expecting inflation to soften, this may force the Fed to have to reconsider maybe increasing their rate hikes and saying, hey, I know we ruled out 75 basis point rate hikes, but we may have to adopt that and bring that back on the table again. So then that's going to be pro-dollar. We may see the dollar rally on this news, but this is going to definitely hurt stocks. It's going to definitely create that sell-off in those bleeding markets if the market does consider this data. So then let's see what's happening. Let's see what's happening. Let's go to
the price already hit the level.
Oh, which one?
The one that we just added for Aussie USD.
Okay. Well, let's just you want to go to Aussie USD now?
No, just go here.
Okay, let's just go to 5 minutes, see what's happening. So we can see here for the dollar, just like I said, the dollar popped to the upside. We should see the dollar increase, because what this means is that the Fed has to stay aggressive. Inflation is running out of control. So they have to raise interest rates to sort of curb the impact that inflation will have on prices. So we're seeing this pro-dollar move. So you would buy the dollar in this case. Yeah, pound USD, like all the dollar trades, like dollar-based currencies, dollar-denominated currency pairs, they all traded in favor of the greenback, in favor of the dollar. So we're seeing this, and I think Bev said the trade that we analyzed just now with the Aussie USD, it just went past the zone. You remember, this is the zone that we identified. You remember we said we want to see it slide down here and then pop to the upside. But just like I said before, whenever you have a pair that's, based in the dollar, has the dollar a part of it, and there's an important U.S. economic announcement coming out, you just have to exercise caution. Your plan may not work out the way you had anticipated. And as we can see, the dollar is strengthening in comparison to the Australian dollar. So then right now we're seeing the dollar pick up. But what does this mean for futures markets? Let's see what's happening with futures. Let's go to E-mini S&P E-mini futures. We're now starting to see that, move lower. This is just the futures. This isn't, the actual spot or actual asset. As far as the S&P 500, this is just the E-minis. But let's go to the Dow E-minis, see what's happening there. And we can see that that's dropping a little bit. This is the 4-hour chart. Let me just go to the 5-minute. Even though we can still see it on the 4, but even on the 5-minute, we can see that it's moving lower. But yeah, of course, the announcement is still fresh. We still got to give it time for the market to read it. We have a whole hour before Wall Street opens for the market to sort of read these data prints and assess what they want to do. But we can see that it's sliding lower. Let's go to another index. Let's go to the NASDAQ E-mini futures, and we can see right here. It's do this right here, and we can see that this is interesting. We can see that it's starting to move up, so that that's pretty pretty interesting. But yeah, what I want to do right now, I want to go back to that Aussie USD, and just share what I would do at this moment. Right now, I wouldn't do anything. I want to sit on my hands until I see certain things take place. So then, like, I know we were looking for a buy, but right now with the way this momentum is, I'm not going to look to buy yet until we see further clarity on if this is going to rotate to the upside. Because just because we see this strong steep movement lower doesn't mean that it's going to maintain that bias to the downside. That's one thing you have to understand. So then if I could see something like this, let me just draw it in. This is on a 5-minute. If we can see price push up, come back down, and either it's forming an equal low or even push a little bit lower, and then if it comes up from there and maybe breaks this high, then that's when I'll look to buy on a pullback in price, and then up to the upside, because that could very well happen. Sometimes you get these nice initial moves, and then price actually continues with its technical bias. So then sometimes that happens, but yeah, we just have to be patient with this one. Don't assume anything. Don't assume that it's going to continue going down. Don't assume it's going to continue going up. Just wait for quite a few minutes, maybe a good 20-30 minutes. Just wait, and then just see what happens. I would wait until maybe the close of the hour, see what happens. I'm not going to do anything with dollar denominated or dollar based pairs. Just sit on your hands and just wait for price to give more clarity on what it wants to do. Yeah, exactly. So then, what I wanted to point out is, this is a common, habit from, of course, new traders. What they would think, or they'll convince themselves, is that I'm missing out on this amazing move. Let me go ahead and pull the trigger and sell and jump in on an already moving train. Like, the train has already moved. You might as well just catch the bus now. Like, there's no point in jumping on this train and actually selling at the moment yet. If you are selling Aussie USD, but in this case it's buying the dollar. But if you do decide to buy the dollar, then wait for a significant pullback if you are going to an area of structure. But what we do recommend is that when important announcements come out like this, give the market some time to assess and figure out how they want to position themselves with this news. What is dollar positioning going to be ahead of the Wall Street open? And once you figure out, give it some time to give analysts some time to figure out after they read and sift through all the data. Then you could say, okay, then volatility has subsided, spreads are lower,
let me go ahead and look for an opportunity to buy the US dollar. And in this case, it would be to sell the Australian dollar
Yeah.
versus US dollar.
Yeah, that's if price is showing you that it's going to continue with that strong dollar bullish bias. Um, and that's the assumption right now, based on what Marvin, you know, told you before, as far as what we could expect with the high interest rates and, the possibility of a 75 basis point rate hike. But, we don't want to assume anything. So then what we want to do is just wait, give it some time. Maybe at the close of the hour, maybe at 8 o'clock, you can check those dollar denominated, dollar based pairs, and you can see what could happen, because very well something like this could happen. What I just drew out right now, that could very well happen, you know. So, we want to be patient. Remember, patience is a virtue.
Yeah. And also, you got to realize, like, if you do enter a buy, if you buy the dollar on this news, you got to keep in mind that the spreads are very expensive. So you'll be losing money on it. Now, in this case, like, the spreads have just lowered. Like, it's not, where it was at the initial announcement. Sometimes the spreads can widen to like 10, sometimes 20, sometimes even more than that. But right now we're seeing spreads beginning to stabilize. That's the difference between the ask and bid. That's pretty much what the broker charges you, sort of like a commission, or a transaction fee for actually using the market or using their brokerage or the exchange that we're on. So then we get charged the spread initially. So then we got to take that into account. But spreads are kind of low. It's only at 1.7 right now.
Even though lately I've been noticing an anomaly, a difference in the spread that TradingView has, especially for this broker, Oanda, and for what Oanda actually shows. There's a huge difference now. I'm at the point right now where I'm almost not recommending Oanda, as a broker. But we'll talk about that later. As of now, what we want to do is look for an opportunity to either buy or sell Aussie USD. And we don't know that yet until we see more clarity on what's, really happening. So we're going to give it some time for the market to prove itself. And then from there, we'll make a decision.
Yeah. And it could be tempting, guys. I know some of you guys are scalpers. And, of course, it's based on your trading strategy. You guys could, if you have a strategy that has stood the test of time, then, go ahead and trade on that. You can pull the trigger if you want, but we're more conservative. Like, we like to say, okay, then let's just wait a bit, because things can easily change. So then we're just going to wait a little bit, even though we knew ahead of time that the numbers were to come out greater than the forecast, then that would mean dollar strength. We already knew that, but that's not a reason for us to jump in just because we know what's going to happen fundamentally, because sometimes it doesn't work out that way. It's still fresh. The analysts are still assessing this data or this report. And really the details is in the report, because I'm thinking right now, if the dollar continues to if there's continued to be strength in the dollar, if the dollar continues to move higher in this case, you remember for Aussie USD, the US dollar is the counter currency or the quote currency. So then that means is that when the chart moves down, this counter or this quote currency, the denominator is strengthening. So we see that dollar strength is coming in, but there has to be something in that report that's causing it to sell off. And that's why you have to take time to read the details of the report, because maybe there are certain areas that they said were softening, but then in the report we saw that they were actually picking up. So then one thing I do know that was a concern was housing prices and actually rental fees. Like, rental fees have been going up, and that's been a concern too. That's sort of included in that basket as far as shelter and consumer, shelter prices, rent going up. But not only that, but even the supply disruption in China with the China lockdown, creating supplies in a backlog and just different things that, we're not getting certain goods here quickly as we, should, then that's going to also help raise inflation, help raise the price of goods and services as well, due to that whole principle of scarcity. I know you guys have been maybe took an econ class at some point, maybe, but even if you didn't, that wouldn't affect your trade. And just know that, right now the inflation numbers did come out pretty firm, and the dollar is strengthening on that. but that would be a negative for stocks, or should be. The textbook response is that we'll see stocks fall, and we may see cryptos and Bitcoin fall as well, which
Yeah.
I'll talk about later.
Yeah. Now, what I want to do right here, because what we will typically see, like even though this announcement is based on the US dollar, the announcement could still affect currency flows, even with other currencies. So then, just because, we see this happening on the dollar doesn't mean that anything else hasn't changed with other currency pairs. So then for now, what I'm going to do, I'm going to avoid some of the pairs that we had that was involving the dollar, which was a lot of them actually. We'll revisit those pairs, once maybe the close of the hour. We'll see what we decide to do with those pairs. But what I'm going to do, instead of looking at the Aussie USD now, of course, we can go back to the 1 hour chart. Let me hide this right here. I'll make it visible on the smaller time frames. Oops. Yeah, but I guess what we can do from here is okay, this is good enough. Let me just delete this. Is go to some other pairs that don't really involve the dollar. So then the first thing I want to do right now, from here, we don't want to trade the Aussie USD, but what about the Euro Aussie? So let's do that now. Let's go to EUR AUD. Let's see how that's moving. Okay. So what I wanted to say was this. You see how this has a strong correction now, even though, it doesn't have the dollar. The dollar's nowhere, in this formula. However, all trades, all currency pairs have to flow through the US dollar, even though we know that this is Euro Aussie. But it's really, the Euro Aussie is really a synthesis of Euro USD and the inversion of Aussie USD, which is US dollar over AUD. But I don't want to get into all of that for now. But this currency pair does involve the US dollar. And that's the reason why we see this strong reaction response to the upside. Because on this particular pair, we was looking to short. We can see that price gave us this nice impulse to the downside. We was looking to short this on a pullback in price. Now things may be shifting and rotating. Why? Because of the US dollar. Remember, all currency pairs flow through the US dollar, and that is why really you have to, even though certain news comes out about the US dollar, you still have to look at other currency pairs because they'll get affected by whatever major announcement happens on the US dollar. Remember, the dollar is king. Like in the world of currency trading, USD, US dollar is king. So then oftentimes you can get an idea of whether sentiment is changing, whether things are rotating, how price is moving based on what happens with the US dollar. So then in this case, we see that we have this strong bounce to the upside. If we go to the 5-minute chart, I'm pretty sure you'll see, a strong, move to the upside. So then right now, based on how prices move, we definitely want to be careful with a plethora of currency pairs. On the majority of all the currency pairs right now, we want to sit on our hands and wait for more clarity.
Yeah. And one thing you got to keep in mind is that the US dollar is the world's reserve currency. And just like Melvin said, like banks around the world, central banks around the world, like the ECB, the European Central Bank, the RBA, the Reserve Bank of Australia, they have the US dollar in their reserves, just for business, for trade. So then it's going to impact economies around the world. That's how strong or how powerful or how much influence US economic data has on the global economy. So then even though this is inflation in the US, it's going to impact the rest of the globe. What the Fed does with monetary policy. Now that we know that the Fed has the green light to sort of say, they have that wiggle room to say, do we want to increase the pace of tightening? Do we want to increase the amount of our balance sheet reduction because they're trying to lower their debt and their deficit and decrease the balance sheet that they've accumulated over the past really decade, you could say. But like all of this is going to definitely have an influence or impact on how currencies are moving across the globe, what central banks are going to do across the globe. So then in some way, if the Fed becomes more hawkish And what I mean by hawkish is that they're concerned about inflation. They're going to hike rate. They're going to be aggressive with hiking rate. Then that may also push other central banks to say we need to be concerned about inflation as well. Even the ECB, who said even in their recent statement that their concern right now is slowing growth and recession. That's the reason why they haven't been hiking rates in the Eurozone. They've been concerned about the slowdown from the Ukraine-Russia war. They've been just really concerned about sluggishness and slack in their economy. But now with this CPI print from the US, would this sort of cause them to reassess or reevaluate, whether or not they should refocus back on pricing pressures versus saying, okay, we need to really focus on slowing growth. So then that's the dilemma central banks are in right now. They have to pick and choose what they want to focus on, slowing growth or inflation. And I think right now the main issue is really inflation. That's part of the Fed's and dual mandate is to maintain price stability and to help boost the labor market. We know that the labor market is pretty tight right now. So then, of course, what's left for the Fed to do is actually maintain price stability and bring prices lower. So then that's the Fed's focus. Now, the ECB has a similar mandate, but there's differences in it, and there's fluidity for them on what they want to focus on. But yeah, I just kind of wanted to, just mention that briefly.
Yeah. So for this one, for the Euro Aussie, going back to the 1 hour chart, there's a number of things that can happen. For one, price could surprise us, give bears confirmation to head lower. And we'll talk about that in a little bit. Or price could continue pushing up and it could come to this area right here. And then we could see a response. We may see some hesitation or pause. So that is what I think is going to happen even with the Aussie USD, as well. But in the Euro Aussie, we could see price come here, and then you could look for double top or something on a smaller time frame, and then you could trade this lower if you want to. Even though it's somewhat risky, but that's something you can do as well. But even with the Aussie USD, going back to that pair, what we can expect is price to potentially test this area right here. Well, I'll just take even at the 6,900 level, and then we can see how price responds to this particular zone. But remember what we said before. Based on directional confluence, we were still seeing a bias to the downside, even on the 4 hour chart. Even though we've seen bullish divergence, overall, the environment was to the downside, bearish. Daily, still looking bearish. So what we may have to see in order to know for certain what's going on is something like this. Let me just draw it out. Price comes down. It could either respect this level or it may push back past it, but we need to see a violation of this high right here to form, like a 4 hour bottoming, reversal type setup. And then in that way, we'll have more clarity that price may move to the upside. As of now, we don't. Momentum is still to the downside, especially with the announcement. And, we just have to see. But yeah, but if you want to, if price does find, if it does pause right at these lows right here where we have this box that we just drew in, then you can look for an opportunity to buy that's at that support, if you do see consolidation there. But yeah, and the same way with the Euro Aussie as well. You look at the Euro Aussie, even on the 4 hour time frame, we were in a bullish environment. So you see this, right? We're in a bullish environment, even on a 4 hour time frame. If someone was trading this on a 4 hour, they'll see this as an impulse and a correction. Impulse, correction, another impulse. That's how they would see it, because price is testing the 20 symbol moving average. You look left, price is testing, structure, right around here. So then, that could very well be happening, and if you want to, you can prepare for that as well. Prepare for that, because based on directional confluence, bias is still to the upside. 4 hours bullish, daily is bullish as well. So you want to stay on the side of that momentum, this buy side momentum right now. So yeah, if we were going to trade this to the upside, then what we could do is this. We can say, hey, okay, we want to look for an opportunity to buy. Okay, 1 hour time frame could be our trigger time frame. And what we could do, if we see price close, if price does close, let's say above this level right here, or this area, then we definitely want to look for an opportunity to buy on a dip lower, or 1 hour dip. So if you do see a break and close above this area, then we can just look for a price to pull back, maybe find support right around here, look left, structure leads close. As a matter of fact, let me just draw this in so that you guys can see it. This is on a Euro Aussie. And then we can look for an opportunity to buy. So let me do this. Oops, let me bring that back. Let me delete this yellow line. Okay, so in other words, what we can do is simply look for price to pull back to this area right here. What was once resistance becomes support, and what was once support multiple times before becomes support again. But we can look for price to retrace to this area if we do get a close above this pink line. For one, price has to close above this pink line at the close of the hour. We have about 5 minutes left until the close of this candle. And if that does take place, then we want to look for an opportunity to buy this dip in price. We wait for the pullback, and then we'll look to execute our buy, and we can likely trade it all the way up to these highs, right around here. Right around here, this area, right here. Let me go to the close of the candles, right around there. So, we'll see what happens, but it looks like price may want to continue pushing to the upside, which is okay, because now we have to adapt, and this is why we always say there, you should always have a plan A and a plan B. Plan B is if things go as planned, do this. However, that's plan A. Plan B is the opposite. If we see an anomaly, if we see something different, a complete reversal, then we need to prepare for that as well. So then what I'm going to do is, of course, place a price alert at this line right here and say crossing up once per bar close. Include the date 5/11, and just say break and close above structure. Look to buy on 1 hour pullback or 15-minute pullback. And I'll explain why in a little bit later. But yeah, look to buy on 1 hour pullback or 15-minute pullback, because sometimes it may be best for you to drop down to the 15-minute and trade this pullback lower. So once we get the break and close above, we can drop down to the 15-minute, look for this pullback in this area, look for a 3-wave pullback as well, and look for your chance to buy. But yeah, so yeah, that's what we'll look for. We still have about three minutes before the close of this candle, and we'll see how things look. We may want to do the same thing on Aussie USD as well. On Aussie USD, we could do probably the same thing. Aussie USD. Yep. And what was once, yeah, right here is already at the lows, but we can potentially see price come and test this area right here. In other words, let me remove this. And we can say, okay, if price is testing the lows right now, if it comes back to test this area as resistance, we can look for an opportunity to sell. And if you want to, you can just target the lows, since we know that this is a nice key zone of supply. Looking left, we can see that. But yeah, that's something that we can look for even on the Aussie USD, because it looks like price may want to continue in that direction. Or you can just sit and just wait for price to completely break this consolidation. So if price does break the lows right here to the downside, then we know what to do from there. Pull back and head lower. So yeah, that's what you can do, even for the Aussie USD and the Euro Aussie for now. So we'll see what happens. But yeah, price completely gave us a different scenario. Now I believe that most of our day trading opportunities are different now. So then right now I'm not going to really go over too much. If you go to the NZD USD, all of them should be showing the same thing. Price pulled back. I mean, this nice strong pullback. We can look for price to retrace maybe to this area where we see this congestion, and we can look for to buy.
Yeah.
I mean to sell. So like for a lot of these you can do that. Even for US dollar CAD, that'll be the opposite direction. You'll look to buy. So for US dollar CAD, you just identify where structure is. We see structure with this area right here. Wait for the pullback, and then you could look to trade it all the way up to these highs right here,
or even more, because right now the fundamentals are on the side of the trade, especially with the US dollar versus Canadian dollar. Like, that was, really, to be honest with you, this was one of the few that was already heading higher, even ahead of the announcement. So it's not a buy the rumor, sell the news type of response with the US dollar versus Canadian dollar. It's sort of still in line with, what was happening prior to the announcement. So you can probably just hold off too on this.
Well, yeah, but most of them were moving in that direction. Even Aussie USD, it was sliding lower for the most part. Like all of them were moving in favor of the dollar prior to that quick rotation.
So but I know, we saw the the double bottom, on the Aussie USD.
Yeah, on a 1 hour.
So then, like, what it looked like the market was rotating at that particular time.
Yeah,
so then,
and just like for this one, we see a double top. Like all of them were in the middle of a slight rotation, but just like we said before, we didn't see directional confluence in a 4 hour. There was always reasons to believe that things could be different. So then that's the reason why it was good. Like if you would have went for the buys, or in the case of the Aussie USD, go in small, like we said, because we didn't have complete clarity yet. But we did see that based on this alert, Euro Aussie crossed up
and closed
above that structure level. We can go there right now. Looks like US dollar CAD may want to go back now, but we don't know for certain. Let's go to Euro Aussie. Let's see what's happening there. Okay, so right here we see the Euro Aussie right now.
It closed above that. It closed pink line to confirm that the market is sort of rotating, that there's conviction and commitment.
Yeah, to the upside. So then what we want to do is wait for a pullback lower. So what you could do is drop down to the 15-minute chart, and you could look for a pullback based on the 15-minute chart. So just look for a three-way pullback. Well, for one, this is what I'm going to do. I'm going to wait for price. Well, we may not get a full 382. I don't think so, because the way momentum is right now, momentum is strong to the upside. We may not get a 382 pullback, but what we'll do, we can place an alert maybe right around here, right above this structure level. Add alert, and then say 11. Price testing 1 hour or 15-minute structure support. Drop down to trigger, look to buy on bull confirm. All right. Yeah, we'll look to buy, on bullish confirmation. We'll just wait for price to come to us. We're not going to chase the trade. We're going to wait for it to get to an area that we feel comfortable with executing an order around. So yeah, that's what we're going to do for Euro Aussie. We're going to do the same thing for Aussie USD. Like all those trades, we're going to look for price to come to these key levels that form or function as structure.
Yeah. Like you want the price to come to you. You don't want to find yourself chasing trades. I know some people have a trading model where they just pull the trigger and they jump in, but really that's going to hurt you in the long run. Like trust me, we've been trading for a long time. Like we understand, how tempting it can be to sometimes jump in, on these trades, but it's just always better just to stick with a set rule system and just wait to buy at support and sell at resistance, and wait for confirmation. Just trust that the technicals will come back into play even when the fundamentals are driving price action at the moment. There will be a point when things will sort of cool down, and you will see, the market start trading technically, or start honoring those levels of support and resistance that we have on the chart. But don't feel like you have to jump in on every single move. That's one thing that you have to convince yourself as a trader. Like, it's okay to not be in a trade. Like, I would rather be out of a trade wishing I was in a trade than in a trade wishing I was out. So then you got to look at it that way. Like placing no trade is a profitable form of trading, or it's safe, effective, disciplined trading where you're not losing money. You're just being wise with your decision, because this is a game where you have to assess risk and you have to do risk mitigation. You have to assess, is it wise for me to jump in now? Or would it be better for me just to hold off and just wait for a pullback to a key level that I know technically should be honored? Because history and the way price history is, like the market gives us the footprints on where we should buy and sell. So it's just good sometimes just to follow that. We know, we heard the trading mantra: buy low, sell high. If you're going to buy, you want to buy at a discount. You don't want to buy when it's already expensive or strong. You want to wait for that pullback. Like in this case, we don't want to buy when it's this expensive. We want it to be discounted a little bit. We want it to be a little bit cheaper. So we want to buy low, and then when it get up to a high, we want to sell high or take profit at a higher price.
Yeah. Yeah. And the more experience you have, you're going to learn that. Sometimes you got to learn the hard way. I would rather be out of a trade wishing I was in than in a trade wishing I was out. If you wanted to, you can plug that quote or paste that note, a sticky note of that quote, right on your monitor, because it is true. And that's going to help you make more money. You're going to be more profitable with that mentality. I'd rather be out of a trade wishing I was in than in a trade wishing I was out.
Yeah.
So yeah.
And and even over time, you'll start noticing that you'll be making more money each month by placing less trades.
Mm-hmm.
Like, trust me, like we've been in this for a while, and I know Danny, he's been trading for some years as well. Like, he can attest to this as well. Sometimes the less you trade, the more money you make. And that's kind of hard for you to believe, or for some people to believe or think, because they feel like, no, like if I trade constantly and more, then I should, make more and more money. Yeah, in theory, yeah, that looks to be true, or that seems like it's a statement that makes sense. But also, the more you trade, over trading, you expose yourself to a market that carries random possibilities. There's things that are beyond our control when we engage in these financial markets. We don't know for sure, like, what's going to happen with price. All we can do is just take the clues that we see, look at our technicals, look at what's happening, and make an estimate. Like, make an estimated guess or a calculated guess on what can happen. That's why they call us speculators, because we're speculating on where price can go. But at any moment you place a trade, you expose yourself to random possibilities and outcomes, and you have to be okay with that. And you have to have a good risk management procedure in place to account for the random outcomes or the random swings and movements in price that are beyond our control. So then that's why, sometimes it's better to not trade as much, because, you can easily overtrade and find yourself liquidating your account easily. And, and how is that beneficial for you in the long run? Like, how does that help you as a trader? So then sometimes it's good to exercise patience and be like, you know what, even though it's tempting to really pull the trigger, I'm not going to be tempted. I'm not going to let the market control my emotions. I'm not going to let them dictate to me, when I should pull the trigger, or to be, compelled or this impulsiveness to jump in. You have to have that under control to do that. You have to do necessary soul work and just, get your emotions under check when trading. Because if you don't, then, I mean, it's going to be hard for you. I just have to be honest. It's going to be very hard for you to be a full-time trader if you can't manage your emotions and manage your fear and your greed, your psychology. So then you have to get that under control.
Yeah, that's the key. That's why really you need to spend more time working on yourself than actually working on these charts, to be honest, because it's pretty simple. I know you look at us do this stuff all the time and you say, Melvin, you make it look easy. And in some ways it is really. However, the hard part is really controlling your emotions, controlling your psychology. You need to really work on yourself, do some soul work, like Marvin mentioned, because that's what's going to keep you patient and it's going to keep you poised and calm. Even when the markets are moving a certain way and you feel that you're missing out on all this money, you're leaving all this money on the table. But then you got to understand, okay, I may be missing out, but what goes up must come down. I'll get another opportunity. Yeah. So I just have to wait and be patient.
Yeah. Let patience have its perfect word. I know that's a bit, Bible scripture, but it's so true. Like the fruit of patience, like you need to develop that as a trader. Like you don't have to jump in on every single swing and move in price. Just exercise patience and self-control and temperance. Just have good temperance. And if you do, you'll develop well. So then for some people, they read, they pray, they meditate, they do whatever they can to get them in a calm, peaceful state of mind before they trade, because they don't want their emotions to go all over the place by executing a trade. Now what can happen is that for a few times you do enter a trade, especially if you knew, you'll get those winners a few times. And what that would do, that'll convince you that it works. You won't listen to us now. You'll say, well, well, I went and I bought the dollar and it worked out well for me. Well, let's see how long that's going to last. Like, we're trying to warn you guys. We're trying to tell you what happened to us. Like, like we're trying to help you to avoid some of the same issues we've done. But, continue to do what you're doing. Like, I mean, like the thing is that like that's the psychology of it. Like you'll get a few winners, pulling the trigger.
You may get a win streak here and there.
Yeah, you're gonna get a winning streak here and there, but trust me.
Especially jumping in on moving trains, like a strong move like this. You will get lucky from time to time, and it's not saying that you were on the wrong side of the market. You were on the right side. There's an impulse in a particular direction. However, sometimes it could literally rape your account. Just like what we see here, price is pulling back. We just have to wait for that alert to be triggered. And then from there, we'll drop down to our trigger time frame. This is the 15-minute chart. So then for those who know, like on a 15-minute pullback, what will our trigger time frame be? This is, for those who, may know. And if you don't know, you can guess as well. Okay, Jesse said 5 minute. Greg said 5 minute, 10-minute, 5-minute. Well, what we typically do on a 15-minute pullback, we drop down to the 2-minute chart, to the 2-minute. Yeah, to the 2-minute or 3-minute chart. And if you have an OANDA account, you can definitely drop down to those time frames. Okay, so then right here, we're testing, the 1 hour, 15-minute structure area. So then, right around now is where I would likely go down to the 2-minute and see what is happening. So let's go to the 2-minute. Let's see what's happening. Okay, so yeah, this is the 2-minute chart right here. I still don't see a 3-wave pullback. I need to wait for that. What we may see, since we do have some level of structure, right around here, we may see price, do this leg A, leg B, come up here, and then leg C down here into this zone, and then we can look for our buy. So yeah, we're just going to play it safe, be a bit patient today. We don't have to be aggressive. Let's go to the Aussie USD to see what's happening. Just 15-minute. Let's do that. Let's go to the Aussie USD. See what's happening there. Yep. So then price put back right into this zone right here. So then what we can do in this case, we can look for the same thing. look for, let's go to the 2-minute chart. Okay, we don't see a 3-wave pullback yet. So that's something that I would like to see: a leg A, leg B, and a leg C, and then come down. But as I mentioned before, who knows? Price could rotate and push to the upside. That's just the funny thing about how the market's been moving lately. So then market would give you a strong move in one particular direction. You think momentum is in that direction, then all of a sudden it throws a monkey wrench, and then price reverses and goes the complete opposite direction, goes right back up to what you've been expecting anyways, just like what we said before. So that stuff has been happening, so yeah, that's just the nature of this business. But if you apply good risk management and money management, you could manage all those losses. You're going to have losses. You're not going to get it right all the time, but you'll be able to survive and see another day and continue to grow your account and make money and profit. So that's one thing I wanted to share. But yeah, you see price testing the zone now, but we didn't get the 3-wave pullback. So I'm not confident in executing this trade based on this 15-minute pullback into this structure. I'm still going to sit on my hands a bit. So yeah, that's what we're going to do. All right. For the most part, we're just going to be sitting around waiting for certain things to happen. This is the Euro Aussie again. Are there any questions that you have in regards to stocks, commodities? I guess we can close out early because I know for certain the majority of the setups that I had, they're looking differently now. So then I'm not going to waste time just going through those setups for now. You guys know what side of the market you may want to be on. But let me ask you guys this: are there any stocks, any commodities that you want us to look at? We can look at gold.
Yeah, or even any questions you have about what we just shared and talked to you about, even trading psychology. Because that's an important skill too. Once you have a trading strategy or plan, you need to grow in your personal understanding of trader psychology. Like, you need to have that. So then we can discuss any topic until the close of the webinar. Just like Mev said, any stock, any commodity, any futures, whatever you're looking at, we can definitely try to analyze it on the chart and give you our feedback. But if not, then we can close out. But yeah, we'll give you guys some time to maybe post something. And you can also turn on your mic too. Like, I don't want you guys to think you can't turn on your mic and share with the group. If you do have a comment, please feel free to turn on your mic too.
Yeah.
So yeah,
we can see a price is testing the 38.2 right now. So yeah, we go down to the 5-minute, the 2-minute. Yeah. So yeah. Okay. I know Rob had a question
about platinum. Well, platinum strong. Seriously, we gold is more steady. Yeah, yeah. Yeah, and that's the thing. Like, even with precious metals, like, typically, what we see, especially in rising interest rate environments, you would typically see precious metals end up struggling in that type of environment. Like, I know Rod mentioned his comment. So then I guess do you want us to sort of look at the different precious metals and sort of assess what's taking place or what's going on? Because we can briefly run through that. Let's just go to gold real quick. Okay, so this is gold. So yeah, I guess you can analyze it from top-down analysis.
Yeah, I know we're on forex.com right now, but it's all right. Same charts pretty much. All right. So yeah, this is the gold priced against priced in US dollar. So right here we do see that price made what is almost like a measured move, push lower right here. It's like a measured move push expansion lower. And for the most part, we're testing an area of structure, hidden structure right around here. Look left, you can see that we have this hesitation candle. And what we can do right here is just draw out this particular zone right here. So we can see that price is responding to this area. It's definitely overbought,
oversold.
Yeah, oversold. So then, you know, we do see that reaction take place. So then with that in mind, what we want to do next is drop down to the 4-hour. And on the 4-hour, we do see price. It looks like it may want to create maybe like a double bottom or some sort of bottoming pattern, which is really, to be honest with you, that could be still be happening even for the Aussie USD. You know, that's why just be on the lookout for like maybe the next few minutes for that one. But you know, we were in this environment where price was expanding to the downside. I think that announcement, like, let me go to the 5-minute, because I think did we see it react?
No, dollar strength.
Yeah, we've seen dollar strength right here, but now we're seeing price come right back up and support what we were seeing technically. Because remember, on the daily chart, you know, we saw price hit support. It gave us that measured move expansion. Now we're should see a rotation to the upside. So the same thing may be happening on Aussie USD, and that's why I said don't ignore that setup as well. The original plan was to look for bottoming even on that chart as well, and that could still take place as well, even on the Aussie USD. But what we see right now is price looks like it may want to continue its push to the upside. So then this is what we're going to do. I know we were at the 4-hour chart before. Price pushed up, went down. Let's see how this is looking on a 1-hour. Okay, so what we can do right now, we can simply wait for price to break this high on the 1-hour. You know, that's what I would do, you know, right now, because it looks like, you know, price is going to return back to its normal sentiment or bias.
Yeah, just for, you know, gold, you know.
Yeah, so then yeah, and yeah, for gold.
Look at the other.
Yeah, and yeah, it may do the same thing for Aussie USD too, you know, but we'll see. But yeah, price expand to the upside, break, wait for that break, wait for price to pull back and retest the neckline as support. Remember what we mentioned before, if you draw your price waves, you can pretty much tell what the key levels of structure you need to look at. And, you know, in this case, it's right, you know, around here. Let me do it from here to here, right here, this area right here. So again, we need to wait for price to break and expand to the upside. Price may find resistance in this area, you know, right here. And then that's when, you know, we could look for the pullback, and then we could trade this to the upside and maybe take the distance of this, the height of this consolidation, and that could be our target, you know, somewhere, you know, around this area.
Yeah, what a wicks are.
Yeah. But yeah, that's what I would do with gold. It looks like gold is now, it may make that reversal, which is what, you know, we were expecting anyways. Also, if you want to, you can wait, and this will happen anyways. When that does happen, we do have this descending trend line resistance. So if price breaks this descending trend line resistance, if it breaks this structure level, then we can definitely look for an opportunity to buy the dip or buy that pullback in price.
Yeah. So yeah, I know he mentioned something about platinum too. I don't know if you want to go there.
Yeah, we can go there. XPT. Let me go to the daily first. Well, yeah, did you guys need to take a screenshot of this, you know, before we move on? This is on the 1-hour chart. This is gold. If not, then we could move to platinum. Okay, so yeah, I guess we could he says share brief.
No, yeah, that's from before.
Okay.
Yeah, he said briefly go through it.
Oh, okay.
So yeah, we could just see what, you know, what platinum is doing, and then we can move on to the next question, because I know we got two other
yeah,
you know,
the
requests.
USD. Well, yeah, either or. This is only on this version. But what we can see here is that the same thing is sort of happening. We see price create what? What type of classical pattern do we see on platinum right now? I'll give you guys the chance to chime in. What type of classical pattern could be telling us that, hey, price may be, yep, I know Adam said inverted head and shoulders. Yep, we do see that, right? We see left shoulder, head, and right shoulder, and now price looks like it may want to push to the upside, which, you know, I believe it is. You know, price came down here, tested this particular area of consolidation where we had these sideways moving candles. This is also some people who have the smart money concept type trading. They'll consider that like an order block, whatever. You know, to me, is structure. Look left, structure leaves clues. But anyways, price came down here, formed this left shoulder. Now we see price pushing to the upside. So then what we want to do is look on a 4-hour chart, because we could see signs of reversal on the 4-hour, something like bottoming, a double bottom, inverted head and shoulders, or something on the 4-hour chart. So then we definitely want to see that. So then let me just drop down to the 4-hour. Okay, and we did see that at the shoulder to some degree. Price formed another inverted head and shoulders, right? Just like, because sometimes when you look at these charts, you'll know what's going to happen. And then we had this pullback, and what we could expect is a continuation to the upside, you know, possibly, you know, to these highs up here. So yeah, platinum, I'm expecting it to go up. That's what I'm expecting for platinum. But yeah, I wish I would have saw this earlier. This actually worked out perfectly. Could have gotten in right here at this right shoulder, traded this up. Yep. But also, you see how there's a patterns within a pattern. We see this inverted head and shoulders on the 4-hour. We also see it on the daily as well, on the larger pattern on the daily. This lets us know that there's bias to the upside. It gives us that double confirmation that we should have a bullish bias. There's bullish momentum. All right.
Yeah, no problem. Yeah, thanks for, you know, chiming in. But yeah, I know Danny wants us to go over the United States Oil Fund, USO. So then we could just do that.
Yeah.
You know,
yeah, we'll do it right quick. Let me go back to AUD USD and see what's happening, because that could be shifting too. Yep, it looks like it is. Go to the 4-hour. Yep, pushed all the way up. Just like I said, I knew it was. Went right down to the zone, and now it's popping up. Like I knew it was going to happen. So then what we could do right now,
you might want to do a smaller time frame. That may be hard for them to
well,
see.
yeah, but you know, it doesn't. Yeah, like what we see is 4-hour bottoming. I need to remove all these arrows.
Yeah, because that's hard for them to see.
Yeah, hard for them to see. But yeah, I knew that was going to happen. You know, so then that's the reason why, like, based on a higher time frame fundamentals, like if you do your top down analysis and you really do it and you really know what you're doing, then you can expect, like, that stuff happens often. You know, that's why you can't solely rely on fundamentals. You have to pay attention to the technicals. But right now we have this high right here, and if you want to, you can just simply wait for price to break this high right here. Let's go to the 1-hour. You know, you'll still see the same thing happen.
Yeah. Now, yeah, and this is the reason why we tell you guys to wait. You know, sometimes, like if you're trying to hold on to a dollar long position, you know, you probably would have been stopped out at break even. You know, but I know some of you guys are scalping, so you could have scalped that move lower, the dollar move. But you can see that for Aussie USD in particular, it's paring back that post announcement drop. Like it's almost completely retraced it. Like that post announcement drop. So then, you know, that just lets you know, like, sometimes you got to give the market time. You don't want to jump in like around a news announcement. You just want to give it time.
Yeah, but also technically, if you had an overall bias technically, because even on the daily chart, like, we were looking for this move for a while anyways. Like, even on the daily, we knew that price was testing this area of support right here, just like what we talked about before. We had a nice well, it's not a measure move, but it's a 236 measure move expansion down to this support. This is what we was looking for. Oversold right here. We was expecting that, so then that's the reason why it's not surprising to me, for us to see something like that. So I know Danny said, is this a triple bottom? Yes, well, you could consider a triple bottom. Me personally, I would just consider this well,
but triple bottoms are consolidation
yeah, there
and
are,
accumulation.
yeah, there are accumulation, consolidation, bottoming, but yeah, you could say to some degree it tested this area 3 times and now is pushing up. But yeah, you could say that. Or you could just keep it simple and just say, hey, double bottom, left bottom, right bottom, boom. Either way, they all tell you to do the same thing. We got to wait for price to break this structure level to the upside before we can be confident in that bullish rotation. So yeah, let me delete this right quick. So yeah, that's what we got to wait for. And by the way, Euro AUD may be changing too. Let me go there before we go to the USO. Yep, and we see that
it's pairing back. Yeah, it's pairing back that post announcement.
Yep,
news. So this is why we tell you guys, like, just be patient. Like, don't jump in and pull the trigger on an announcement because things can quickly reverse.
So yeah, things are reversing. Yeah. All right. So yeah, let's go to the one
USO.
Yeah, USO. And let's do that right now. Oops. All right. So all right, right now we're looking at the daily time frame, and what we can see here, we can see a few things technically. For one, prices in this distribution consolidation type phase right here.
Well, we don't know if it'll be confirmed if we do get a break lower that this was distribution.
Yeah, of course. But yeah, it's consolidation period, which means that, either the sellers are trying to gain control of the buyers. But one thing we do know is topping is in consolidation. And we believe that we could be in this distribution phase. Stochastic is overbought right now. So then
turning lower now.
And it's starting to turn lower. So then that's one thing that we can assume is that price may want to head lower. But we do have this ascending trend line support that we have to pay attention to. And right now price is testing this ascending trend line support. And what we can see that, on a few occasions when price tested it, we saw a reaction in price. Boom, boom right here. Boom, boom right here. So then, right now I'll be somewhat patient with this one because we could very well see price react to this trend line. We don't know for certain what's going to happen, but if I'm a betting man, I would assume that we could see a break to the downside, definitely expansion lower, a break below this trend line. That's what I could expect on my end. But we do see this trend line. Price could very well do what it's been doing and push to the upside. One thing I want to show you also is how symmetrical and how harmonic the market is, because if you look at these moves, every time price came and it hit the low, it pushed up a certain amount of pips, right? And it seemed like it pushed up the same amount almost every time. You could take this line, drag it, and where does it go? Voila, right there, same area pretty much. So guess what can happen? Same thing can happen. Price could very well push to the upside from here. So then, if price does respect this area, which we may not know for certain until tomorrow, we can see price expand and hit and at least hit these highs up here. So then one thing we do know is that this is an area of structure right here. So we can see price make another retest of these highs up here. But there's also the possibility of price breaking to the downside as well. And if that happens, then that's good. That's good news for us. It doesn't have to be bad news. It can be good news. But what I'm going to do is I know
Yeah, markets are open now.
yeah, the markets are open.
So it bounced up.
Yeah.
It's not at it's at 78. That's where it bounced up.
Yeah. Okay. Yeah, it bounced up right here. Yep, it bounced up. Yep. So yeah, you can say that it's sort of to some degree respected this area structure. We saw price gap up, and it could be heading up to this area right here, this high right here. Because
smaller time frame.
Yeah. So yeah, let's go down to, let me go down to the 1 hour for starters. So right here, we see this on the 1 hour.
You see that gap.
Yeah, and we can see this gap to the upside. And what you could do, you can wait for price to maybe push lower, maybe fill this gap a little bit, create more something like an inverted head and shoulders, and get in on that right shoulder, and maybe trade this up to this area right here.
Yeah, it don't have to go the complete way, to fill the gap and and absorb all these orders that it could have missed out on. It could just go, midway, in the middle point,
Yeah.
test this area of structure, collect whatever orders they, missed, and then, accumulate that liquidity, absorb all of that liquidity that they missed out on, and then, trade this to the upside. So then, yeah, that's what could possibly happen. But, it's now positive. It opened positive. It could continue to go higher. That's why it's important, to look at, order flow and things, even from, stock, regardless what, whether, whatever broker you use, there's different data, volume data, orders that you can look at to sort of assess, okay, who's in demand and what's going to happen. So, but on a chart basis, on a price basis, we see this gap higher. We'll be prepared in either case. If it pulls back, be prepared to buy. But if it extends, then just, be prepared to buy on a pullback at a discount level. But yeah, so it seems like it's respecting like the channel that you
Yeah, it's definitely respecting that. For some reason these lines aren't being added on these lower time frames. I don't know what's going on, but our trading view account has been like that recently. But well, that's the reason why. So yeah, going back to the 1 hour, we see that price has a sideways price action for prior. This was at the close. Yesterday's
close. Yeah.
So then you should expect that type of price action, but you do see this break to the upside. So
yeah,
right now you just have to wait for price to come to us. Look left, structure leaves clues. We have this area of structure, right around here. So if price could come back into this area, test this area right around here, you could look for an opportunity to buy. Boom, boom. And
so what price area? We can give the numbers.
Right okay, here. Yeah, the low right here of this zone at 76.03 and 76.85 or yeah, 76.80 you could say. So then yeah, let me just do this. Let me just say make it flat 76.00 76.80. That's for
USO.
Say 1 hour support. Yeah. All right. Yeah.
You should word it better. 76.00.
Oh yeah, I made a mistake. Yes, 76.00. That's what I mean. Yep. But you guys understand. So yeah, 76.00 to 76.80. All right.
Okay. Now QQQ. I know Ryan X for QQQ.
All right. So let's do that.
Yeah. That's the Invesco NASDAQ. ETF is an ETF for the NASDAQ, connected with big tech. And we know that for the past few days, technologies has been struggling. Really, the whole fintech, financials and tech have been struggling. That's fintech with even cryptos, Coinbase, which I wish we had more time to talk about. But yeah, this is the daily time frame for QQQ, and
Yeah, and what we see here, price is giving us another measured move expansion to the downside. If you guys can see it, we have this move right here. Then now price is giving us another measured move expansion to the downside. So right now the environment is bearish. We could see a rotation, a correction, a slight correction to the upside, maybe to this area of structure right around here. Look left, structure leaves clues. Right around here, we can see price potentially correct. But for now, it's looking bearish. This daily chart looks bearish. But let's drop down to the 4-hour and maybe even the 1-hour. I think the 1-hour will actually be a bit better. But let's do the 4-hour first. So then right here, this is the 4-hour chart. This is what we see on the 4-hour. Let's see the 1-hour. That's what I really wanted to do. So, yep, 1-hour is consolidation. You see this consolidation or this potential accumulation phase. If we can get a break to the upside right here, then we can trade this higher, possibly to this area of structure, up here. So again, this is something that you could do. Either price is going to go up or go down. If it continues going down and if it breaks these lows, then we could look for, a sell. But if it respects these lows, then we can look for the breakout right here. And then let me delete this line. Then look for the retest of this neckline area right here. And then trade this to the upside. So yeah, that's what I would do for now. But as of now, what we do see is prices trapped in the range, and however you want to look at it, is trapped in a range for now. And it either wants to break to the upside or breaks to the downside. So if it breaks to the downside, if it continues falling, then it's a possibility we could see something like this. So yeah, it's just a matter of just waiting for price to break out in either direction. So that's what I would do. But I'm leaning towards it breaking to the upside, mainly due to the fact that we're at the end of a daily measured impulse, and plus it's oversold on the daily. So then that's the reason that's why I'm doing that based on a technical perspective. But price could very well break to the downside. We can have a breakdown of this consolidation, and it could just hint to more downside pressure.
Yeah, exactly. Like, yeah, there's gonna be a few more things. Like I was gonna say, let's look at the dollar and see what's happening with the dollar, right now. So we just go to the Dixie, and then we're gonna call it a day. Okay. So yeah, we saw the dollar paired back that post announcement gain, and yeah, so then we see that we're pretty much back to where we were prior to the announcement. We're back to where we were prior to the announcement, and yeah, like now we have to figure out what's going on. So then we're just going to pay attention to technical clues, just to sort of figure out what side of the market we want to be on. We're going to look at various currency performance indexes and spectrums to get an idea of which currency is strengthening and which currencies are weakening. You can also look at FinViz to tell as well. Let me just do that real quick.
Yeah, we didn't go there yet.
Go to FinViz real quick, and as you can see, right now stocks are currently in negative territory. The indices right here. But let's go to, well, let me just go to the Forex just for the sake of time. Forex. And we can see here, based on this currency spectrum, this 1-day relative performance, we see that the Aussie, the Kiwi, and the Canadian dollar, these are our commodity linked high beta currencies. They're the strongest for today. And right now, the US dollar is weakening, even after such a strong inflation reading, or I wouldn't say it's strong, it's just better than what had been anticipated. And it's showing that inflation is still at peak levels. Like it's still high, 8%. Even if it would have dropped to 8.1 or 7%, that's still too high for inflation. So either way, the Fed is going to still have to push the push the accelerator and hike rates in either case, whether we got a good number or a bad number, because it's just simply too high. So, but yeah, we see the dollar weakening along with the Japanese yen. These are our safe haven uh, funding currencies. So then we see that they're selling off, and we're seeing this risk aversion. So then, really, the forex market is kind of it's moving differently than stocks. But also, there are times when the forex market can be a leading indicator of what could potentially happen midday after the stocks have done what they needed to do, and then we'll see that bounce.
Yeah. So don't be surprised if you do see that.
If we do see a bounce later on in the session for stocks.
Yeah.
So then this is the Aussie and Kiwi. This is risk sensitive, so that's connected with risk appetite. But let's go to the VIX futures right here. We can see that the futures is interestingly moving lower.
Yeah, which means some level of risk.
So then there could be some risk appetite. So then we could see things change. Like it could be negative now, but it just opened not too long ago, so it could be making its move, its rotation to the upside. Because these are starting,
and that's for USO and QQQ.
Right.
Those could be, we could see more upside.
But yeah, the United States oil, of course, when we look at oil right here, we see that that's, moving in positive territory in line with inflation. We're going to see a pickup in energies. But what I see right here is even with Russell 2000, the Dr. Russell, that's what we call it, because it's really a good risk barometer. It's, your small to mid cap, stock companies that aren't as large, but yet this is a very good indicator for the, it can give us a good diagnostic or diagnosis of the market. That's why we call it Dr. Russell. And then we also call copper Dr. Copper. So, both of these would be good indicators for risk and market sentiment. But as you can see, the Russell kind of slipped a little bit. It's just really floating around its opening range. So then we may get that right now, especially at the open. So we still have to wait a while. It's still new. It's still fresh. It's only been about 15 minutes since the open. So we just got to give it some time. But, and even the VIX started picking up above its opening level. It's now in the green.
Yeah, so that just happened.
Yeah. So that's, you just got to be aware of just what's happening with price and, just monitor it in real time. Like things can rapidly change. But yeah, so we're seeing Bitcoin bleed, Bitcoin moving lower.
Yeah, it looks like a murder scene right now.
Yeah, it's bleeding. And, I would go over the conspiracy theories. There's a conspiracy theory floating around. I mean, we don't know how true it is, but the word on the street, the gossip on the street, from what I heard from a little birdie, like, did someone comment? Oh no. Okay, zero. Okay, $0. Like, are you saying that? Yeah, it's kind of hard for us to see. Oh yeah, okay, he put an emoji. But pretty much, from what I heard from a little birdie, I don't know how true it is, but there's a conspiracy theory going around if you follow the 4chan or the Reddit channels with Wall Street Bets. And pretty much, it's called the King Griffith or the Citadel conspiracy, where pretty much what happened is that Citadel, they borrowed some Bitcoin. I think they borrowed about 100,000, Bitcoin. And then they traded 25,000 of that Bitcoin for Terra, or for, UST or Terra. It's like a stable coin like Luna over USDT, if you guys want to look at it. But you can see that, like, if you was to go to the chart, you would see that failed. I think, let's just go to it so that we could talk about it. But Luna USDT, I think this is it.
Yeah, there's so many different things you could trade right now.
Yeah, but let's go right here. But of course that collapsed lower. It still seems like it may continue to fall lower, but the whole word on the street is that they opened, like Citadel opened a massive short, an aggressive short position
on Bitcoin.
Yeah, on Bitcoin. They started selling about 75,000 of their Bitcoin when it began to fall to a certain level. And then that's so that they pretty much wanted to unpeg tether or just a Terra from the US dollar since it's a stable coin. So there was an attempt to sort of depeg it or unpeg it. So then this is what forced I think their name is Quan. Like Quan had to start selling to further push down the cost of Bitcoin so they can retether it or repeg it back to, Terra back to the US dollar. But all along, Citadel is pretty much laughing to the bank because they put in a massive short earlier on, and they're sort of manipulated, I wouldn't say manipulated, but they're sort of banking on it falling and tumbling lower, and they kind of instigated it and tricked it by pretty much using Terra as a way to do it. So then, that's what's creating this, massive bleeding across the board. And I know it's a lot complicated. Like for me, to be honest with you, I'm still trying to learn and understand that whole cryptocurrency space. I'm considered like a novice in it because it's very complex. But that's what the word on the street is. If you follow Wall Street or 4chan, there's talks
Yeah, Wall
about
Street bets.
Wall Street bets and 4chan channels. There's talks about the King Griffith conspiracy that, King Griffith or Citadel has become the enemy of all apes. And if you follow crypto markets, you know that apes are those that they have solidarity, just like the Wall Street bets traders. They feel like together we can do more together when we have solidarity. Let's beat the market. It's based on the whole Planet of the Apes, and when the apes began to work together in order to fight off the enemy. And that's pretty much what's happening. They're saying that King Griffith has been the enemy of the apes.
Yeah.
So then, but yeah.
So a lot of people who were bullish, they're sort of bleeding right now, on crypto.
Oh yeah, of course we know that. Yeah, it's pretty much deleveraging or selling off. So yeah, we can see that even when we look at this heat map. But I know some of you are holding on for dear life. So yeah, but Ripple is down about 8.98% based on this. So yeah, so it's not a good day for cryptocurrencies. But yeah, that's pretty much it. I guess we can call it a day. Thank you guys so much for joining. I know Melvin can do the close.
Yeah. I hope today was helpful. I know we didn't really have any time to really trade or execute a trade, but yeah, the markets change. We have to adjust, and this happens. So but yeah, it looks like things may head in the right direction. Right now it looks like what we planned for may be working out. So we just have to give it some time. But yeah, thank you guys so much for coming. We really do appreciate you guys. We hope you guys are getting something from these sessions. And I know what we mentioned before. I know during the summer we want to really meet really soon. We're going to meet and probably talk about getting funded, because I know some of you guys want to do that. And what we can do is, of course, do it as a group if you guys are interested in that. So we'll definitely let you guys know more details about that, and just a different money management plan that you definitely have to apply when getting funded, and just some tips just to help you guys out. But if we do it as a group, it'll be better overall. All right. Thank you guys so much for coming to today's live trading session. We really do appreciate you guys. And as we've said before, remember to always count your blessings, not your pips. And we will definitely see you soon. Oh, wow. Ethereum is now in the positive. What happened? Just jolted up. Huh. Okay. Interesting. Wow. That is definitely interesting. But all right. Yeah, I don't want to make this any longer. We'll be on here for another 30 minutes if I was to check. But thanks again for coming, guys. You guys have a wonderful, blessed day. And we'll definitely see you guys and chat with you guys in the room later on. Looks like things are shifting. Bitcoin is not positive. Wow. Like it is a sudden reversal, like in these cryptos.
Look at the Dow, it's up 200 points.
Oh, the Dow's up 200 points from what Marvin just mentioned. Like things are reversing. Wow, complete switch. Just like what we mentioned, we were expecting something like that to happen.
Dixie moving back down.
Dixie moving back down, just like what we mentioned before, which means that we should see a break to the upside in Aussie USD. Yeah, everything is moving as we originally planned, but that announcement threw a monkey wrench, and that's the reason why we had to sit on our hands a bit. And now the market is doing exactly what we plan for it to do. So yeah, what I'll do later on, maybe this afternoon, I'll send some markups, some chart markups to the group on some of the pairs we were looking at. And some of you guys who have access to that section, you can look at those and make decisions on what you want to do. But yeah, that's it. Thanks everyone for coming. And as we've said before, let me say it again. Remember to always count your blessings, not your pips. Know that you're blessed. You have breath in your lungs. God bless you. You're here today. That's a reason to rejoice. All right. With that said, we can move on. Have a wonderful day. All right. Talk to you guys later. All right. Get in bye.